Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Wednesday, July 13th, middle of the week news coming in today. We're going to be talking about the increasing hyperinflation as we predicted before that it was going to go to 10%, and we're almost there right now. We're not even out of the month of July yet, and this when almost approaching the dog days of summer, guys. Please be sure to subscribe to this channel for the latest in the U.S. financial news market and also the world news market as well. So today we got the numbers that inflation rose above 9%. And this is what I've been telling all of my followers, that it was going to go to 10%. And here we are almost at 10%. The official numbers now, we know the unofficial numbers are well above 10%. Unofficially, we're at 18% inflation. But going by the official numbers from the Bureau of Labor Statistics, and the consumer price index jumped up to 9.1% today in June. That's the month from last month. So this month, we know the numbers are continuing to rise, and it's not going to go down anytime soon, guys. The good news is that every day we have more and more time to prepare, or to try to prepare as best we can. No one can be fully prepared because we don't know the options, how this is going to play out. But we do know that a slowdown is in progress here, and we do know that a recession, a double dip recession, is coming. Even a depression. So we do know those things. We don't know in what manner it's going to affect the commodities, gold and silver, cryptos, but everything is going to be on a downward trend, and we don't know the extent of how the credit and housing market is going to handle this once we get to the bottom of this. But it's going to be a while before we get to the bottom. So listen now, these guys, this is excluding food and energy now. The CPI, which is the consumer price index used to measure inflation, right? It automatically takes out food and energy. So you know that this 9.1 number that they're telling us is higher than that. But the official numbers is at 9.1%. So core CPI rose 5.9% compared with the 5.7% estimate. All of the pundits on TV, on CNBC, MSNBC, Fox Business News, Yahoo Finance, you name it, they're saying that we need to wait and see. That they're saying that the Fed acted too late in curbing this inflation, and now there's a chance that we could see a full 100 basis point rate hike on the July 27th meeting of the Federal Reserve. Many said they should have been doing this sooner. They should come out tomorrow and start raising rates to curb this inflation. But guys, we're heading toward Venezuela 2.0. Remember, Venezuela economy melted down. The stock market melted up to 40-something thousand, okay? And their currency became worthless eventually. It's going to take this U.S. giant economy a little bit longer, because we're a $15 trillion economy here, supposedly, in the United States and all of that. It's going to take it a little bit longer to break down, but you can see the cracks in the dam right now. So, guys, gasoline, groceries, rent, dental care surging. And then another thing I noticed too, guys, and you've been noticing this too, a lot of canceled appointments. Canceled appointments for services, retail services, whether it's taking your pet to get groomed, getting your teeth cleaned. A lot of people, they're saying that the hygienists are calling out and sick or not available, or the shortage of dental care hygienists. Have you guys noticed that a shortage when you go they're saying to get basic routine services for either your pet groom, dental services, other services for elderly care? You notice that they're saying that they're having a shortage of workers, and they're having to reschedule people out far in advance and all that kind of stuff. Let me know, and medical things too as well. Let me know what you're seeing out in the field. I'm seeing a lot of that, and also this is going to be crucial heading into the fall and after the late summer and the fall. Workers' hourly wages fell 1% during the month and are down 3.6% from a year ago. Once again, the United States economy, we have not got a real wage increase, not a cost of living adjustment. I'm not talking about that. A real promotional wage on the U.S. wage worker. We haven't had that since the mid-90s, 1990s. 1996 was the last time we actually got under, I think it was under Bill Clinton. Might have been that we actually got President Bill Clinton, that we actually got a raise that outpaced inflation yearly. So we're well behind the curve here, guys. And what's going to be interesting to note is that as the inflation creeps up and the wages, pressure on the wages should go up too as well. We're not seeing that. Wages are remain stagnant. The paychecks are not going up every 2 weeks or every month for some people. So this is very concerning. Okay, everything is going up but your paycheck, and this inflation is clearly not transitory. So we're on to see record pace inflation. Now, I told you I predicted 10% inflation. It's almost here, guys. Next week, by the end of this month, we'll be at 10% inflation officially, quote unquote. And this is exactly what I've been talking about. And not only me, a lot of other economists and guys in this space on YouTube have been preaching the same thing, that we're headed for a hyperinflation. Then a brief lull, like a stagflation, and then we're going into a massive deflation. But by the time we get to massive deflation, only the rich, the super 1% or whatever, top 1% around the world will be able to purchase these assets and to buy up everything. And like Charles Schwab, that quote, you will own nothing and be happy. So that's where we're heading. And you can see rental costs rose 8.8% in June. This is the largest monthly increase since April 1986, according to the BLS. That's the Bureau of Labor Statistics. So many people have said that they will. I've talked to many people out west in California and other states who said they would love to sell that house and move to Idaho or Montana, a cheaper cost of living state in the Midwest. But they're saying that, well, if they sell, where would they go to? They'd be going into a higher rate market, a higher competitive market. And the equity, it just wouldn't be worth it to sell because they'll have to go and buy a house at a higher rate, even though they might get a profit off the house they're selling now in a state in a hot market, supposedly hot market right now. So let me know your thoughts on that. I know many states like California, Florida, Illinois, you name it, Texas, these states, the Maryland, D.C., Virginia area, a lot of people are moving, towards those areas or moving away from those areas. Let me know what you're seeing in terms of the mortgage market. Are people selling the houses? Are people trying to get rid of different things like that? Gasoline prices. One other thing too I want to know, gasoline prices did come down. That's the good news. It came down like maybe 5 cents on average in most markets, 5 to 6 cents. So we're down to like $4.82 a gallon according to AAA for the national average. Here's the problem, guys. Gasoline prices, even though it came down, this is just a temporary low. As you know, supply chains haven't been fixed. President Biden and others are over in the Middle East tour right now, as you know, trying to beg for more OPEC, which is the oil petroleum exporting countries that control the oil supply, begging them to release more oil into the system. But what about producing pipelines here? What about the Keystone Pipeline? What about getting those things on track? I guess they don't really want to do that. Until after the midterms. Nobody wants to touch that subject after the midterm elections, but we're having a difficult time here at the homeland, but we're still sending billions of dollars of aid to Ukraine, which is a good thing in terms of humanitarian aid, but it's a bad thing in terms of what it's going to do to our economy. It's going to wreck this economy completely because we haven't spent money on our infrastructure. These cities are falling apart. Crime is going up tremendously. And we're getting less. We're paying more, but getting less at the grocery store. A bag of chips, it's even more air in the bag than before, and it's a smaller bag, but you're still paying $4 or $5.99 for Tostitos or whatever it is, chips of your choice. Okay, you go to the mechanic. You're still paying labor costs, extreme high per hour labor costs for simple jobs, changing an air filter, changing a tire, dealership or whatever, you do. Basic oil changes have gone up even for that. So we're in for real incomes are falling further, and prices of all the goods and services that we need is going to continue to go up. And this Ukraine invasion, Russia war is going to spill over, I believe, into the western flank of NATO countries, and they're going to have to get involved. And this is not going to be something that's going to be we're going to get out of in a year or two. This is going to last the rest of President Biden's term and into the next president's term, whoever that is, in 2024, 2025. This conflict that they got going on in Ukraine, and we just have to pray that Iran or anybody else doesn't get involved. But apparently, that's what everybody's aiming toward. And these truckers are going to be absolutely hurt and destroyed because diesel prices have been going up, and now California is requiring truckers to get special licensing. They have to go through special competency licensing. It's a series of 4 tests they have to pass, and so truckers now can't be independent contractors owning and leasing their own vehicles. Now they have to go through all these tests just to be self-employed, and they basically want the truckers to become, instead of being 1099 self-contractor employee, they want them to become a W-2 employee under a company, quote unquote. So this killing of small businesses is everywhere, from the trucking industry that basically ships our goods and services to everything else. And so this is dangerous precedent that's being set in California that other states are likely to follow. And so many truckers said they can't afford the diesel and the input costs now. They may just end up just merging into other trucking companies, or just quitting altogether, some independent contractors are saying. So let's keep them in our prayers, and other people as well. Thank you for joining me on this edition, Wednesday edition. There'll be a lot upcoming earnings season this week and next week. I'll be reporting on that as well. But we just got a lot of bad news this coming week, and things are going to continue, as you can see out there on these highways and byways of America. So continue to prep, continue to pray, and I'll talk to you as soon as the earnings seasons and everything comes out later on this week and into next week. Thank you.